Good evening, it's Gene Inger, and this is the Wednesday final. As we began this stock market day, we talked about this effort to mask the unrealistic valuations by talking about allocations and talking about the Fed asset purchasing plans, and the same in Europe, and the stability and the avoidance of problems like Draghi was saying. Well, the reality is that the Spanish and Italian bond yields are saying otherwise. Germany is talking about 29% lower overall European car sales for this year. That's not exactly what creates a stronger economic recovery. As a matter of fact, it points towards recession. As that occurs, and as they try to weaken the euro and the dollar comes up, the stock market in the U.S. likely goes down. There is a series of competitive devaluations going on in the world today, and I believe that you're seeing many of the stocks that are reflecting allocation efforts, including utilities, including rails, some oil stocks, leading the upside, while technology and even some financials start moving lower, while people tell you they are moving higher, but they're not. And indeed, this has been going on for some time, and that's why the upside is, in a sense, a rotational charade. Meanwhile, much has been made about the upside that we've had in a lot of stocks. We have 10-year yields now practically unchanged on the year. We have Apple finishing the regular way trading today at 514. Now I'm going to click on the aftermarket activity and you can see what happened. Basically, Apple came out, met their earnings per share goals, missed a little on the revenues, failed to impress with online iPhone sales, and their total cash grew to $137 billion with a B. This was the most anticipated earnings release of the quarter, and I do not believe it was quite the dud that people were saying. I think it was a great buy the rumor, sell the news, and you have a lot of people that were probably leveraged longs expecting they'd get over 50 million iPhone 5 sales, and those folks are in panic, and that's why the stock was down 25 points. They bounced it a little, can't even see much of that here. Then they took it down over $50 a share in the aftermarket. Let's put this not only on the 10-minute chart, which shows the clear break of the rising bottoms pattern, but let's go to a daily chart, as we will, and usually do for all our charts on the evening report of all the videos that I do every day. But in any event, Apple, on a daily basis chart, we gave a sale at 700 on the iPhone 5 hype. We thought it would bounce back, and it did on the iPad mini, but that it would then head lower. Our goal was that it would get into the 400s. We're obviously there with an outside shot at the mid 300s, like give or take 350. You can't put an exact number on it. Only fools do that in the stock market. You say, well, I said sell at 700. Well, I did. It was at 700, and we thought it was based on fundamentals. The idea that everybody that wants to buy hype and buy product news was buying. And I don't want to say that the schmoes were buying and the pros were selling, but that's what I thought it would shape up to be. Forgive my laryngitis. And in any event, if we get to whether it's 4.25 or 3.25, whatever the price is, and I see an indication of a base and a low, I will say so. But to project the specific price well in advance is not responsible analysis. Rather, the analysis is we called the top. We were bullish on the stock from $12 a share with individual trades in between for decade. And indeed, we may be bullish on the stock again. It may go to 1,000 a share someday. I've said that. But in the meantime, we'd like to be reaccumulating in the 300s, if at all possible. Meanwhile, I think that the world situation remains difficult. The IMF lowered today the growth rate forecast on a global basis. This is not a surprise. The Dow finished up 67. Tomorrow it will probably be down, and then it'll bounce, and then it'll head lower again, perhaps. You still have that allocation game going on. Transport's up 2 today. The E-mini, S&P, we had actually a long during the day, but our bias is for this to run out of steam, whether it makes it over 1,500 or not. The dollar is better against the euro a little, and crude oil took a hit today. Good evening.